Right, folks, first thing in the morning on Sunday the 18th of October. Dollar index chart. You know this one. You know that we're in a 9-year bull trend and we've just tested the big support level down here. I'm not going to go over that again. Bullish engulfing candle. So the dollar index chart looks positive in the long term, but in the short term, we could just go sideways. And let me see now, I started my chat room beginning of September. And things went very well for the first 3 weeks. Lots of nice swing trade opportunities, big profits. About a week and a half ago, I said to you that I think the markets were going to stop swinging around and we're going to start moving sideways. Now that was the right prediction. We did start moving sideways, but the problem is the day you realise that the markets are going to stop swinging around and moving sideways doesn't make life necessarily any easier, because what you need to then do is figure out what the ranges are going to be. Are we going to trade in a channel, whether that be an upward sloping or downward sloping channel or a sideways channel? Are we going to form a triangle? What sort of pattern will we form? And you obviously don't know that until a few days later. And it now seems like there are triangle patterns forming all over the place. So at least we now have a clear picture of what we're forming and some ranges that we can actually trade. So for example, in the dollar index, we can trade in between these trend lines, wait for the breakout, which I think will probably be higher based on that longer term chart, but there's no point in trying to preempt that. We need to wait for confirmation. That also gets tricky because you often get false breaks, for example, to the downside. It gets everyone short, then the market rockets up through that trend line and up. So this will be a difficult period, and obviously I'll do my best to navigate it, but at least the calls as far as direction have been right. We are trading sideways as I expected a week ago, and now at least we have some trend lines to trade. With the Aussie dollar, the longer term trend line, the monthly trend line going back to 2014 actually indicates some upward movement in the Aussie dollar, but I'm not going to pay too much attention to that right now. I just thought I'd show you, just because we held that longer term trend line. But I think what's most important is on the daily chart. Now again, this is a big triangle. I've taken the trend line all the way back from June. You can see it held perfectly last week, with a little bounce. The fact that we're holding below the 100-day moving average, which is the blue line, at around 70.90, 7100, that is negative for the start of this week. We've got the trend line down here at 70.60, 70.50. So we're going to have to see which way that breaks. We can even trade that little sort of 40 pip range and then wait to see. Now if we break up higher, there's a good chance we'll get up to the 7200 area. We can sell it there, assuming that the market will remain in that sideways channel, and then we're going to have to be again ready for breakouts. This isn't easy, but we know what we've got to do, and we'll just have to. When we, for example, say we hit this resistance level, again it might have a false break. We might end up getting in once or twice before we actually get the move we want. So it's wise to be patient. What I really like to do is wait for the breakout, see a test of the trend line, and then hopefully go with it, rather than trying to guess if we've broken or if we haven't broken, because then you end up getting into 4 or 5 positions before you get it right. So I'm going to probably be more patient. I do risk missing the whole move if we break out and then just rock it, but it's a safer strategy. So that's what I'm going to be looking to do. Weekly chart of the New Zealand dollar is all over the place, doesn't give us any indication of what's going on at all. Again, 100-day moving average blue line is holding the downside as I expected it would do last week. That's where we took our profit from the short up here. So clearly trend line up here, another sort of triangle formation, triangles all over the charts this week. This is the neckline to the head and shoulders. You already know about that. That comes in with the 500-day moving average. So this is a very, very important support line. If we were to break the 100-day moving average, we'll be looking to buy around here, but then we'll be looking to reverse into a short if I think that's broken. So for now, I'm going to assume we'll stay in the triangle until it breaks. Trend line up here around 66.60, 66.70. Just to confuse matters, really, when you look at the short-term charts in all of these markets, there's different patterns. So this is something else I'm going to have to keep an eye out for almost on an hour-to-hour basis. This is the New Zealand dollar, the hourly chart, and as you can see, we are in a really nice channel, relatively narrow, and it doesn't really come that clear on that daily chart. So it's the hourly chart to focus on. Now, these moving averages in the middle are doing their job, and also the Fibonacci level there. They are doing their job on the bounce. So we're going to watch this initial trend line support down here at sort of 65, 80, 65, 70. I think that ties in quite nicely with the 100-day moving average, does it? Yeah, 65, 80. Okay, so we'll be trading that level in New Zealand dollar on the downside, and obviously waiting, be ready to sell a break below to test what I showed you was the 500-day moving average around 65.30, 65.20 down here. Break above 66.30 can take us up to this trend line, which is at 66.85, but actually that's just a little bit higher than this trend line here, which is at 66.63. So 66.60, 66.80 is the resistance. We'll buy a break above here for a move, maybe up as far as 67.90. So you can see there's a lot to watch, and we're going to have to be quite active. This isn't going to be a week where you can just buy something and hold it for maybe a day or two and then take a nice 70, 80 pips out of it. I think the dollar-yen weekly chart just adds to the confusion, if anything. This is a massive triangle pattern, and you can see we tested the low end of this triangle pattern. But we're literally down 1 week, massive, down 1 week, up the next, down 1 week, up the next, down 1 week, up the next. Crazy. The weekly chart really isn't giving us any clue for direction at the moment. Daily chart doesn't give us much better, quite frankly. I think we're in this downward sloping channel, so having sold up here we did quite well, but since then it's been tricky. Down 1 week, up the next, down one last week, and then a recovery. So very much in a sideways pattern. So the only thing you can then do if you really want to find trading levels as a day trader is go to the shorter term charts, and when you go to the hourly chart, that to me is a bit of a mess. I've got trend lines all over the place here trying to figure out what's going on. So really, probably this is one to leave alone. We're not getting huge moves anyway. We seem to be stuck in right now a range from 105.50 to 105.20, so that's not really any good to anybody. Euro yen on the weekly chart in something of a downward sloping channel, I believe. Holding below the 200-day moving average, which is negative, certainly was last week. We plunged from there, but this weekly chart again not really giving me any swing trade ideas for this week. On the daily chart, again, probably a triangle story here. Well, it's a mix. This trend line is working and it held on Friday. Now we have a trend line after the recent peak, last week's peak here. So I can argue that this is a downward sloping channel that we're trading in at the moment. But of course, this trend line is important. It's more longer term than this channel, and it has held. The 100-day moving average doesn't seem to be having much effect at all. So we're going to watch this trend line down here around 123.00. We're going to watch for a return back to 124.10, and we're going to watch this upper trend line here at 124.60, 124.70. And then we're going to trade that triangle. Break below here would indicate that, yes, this channel is developing further, and we should quite quickly move down to 122.30, 122.00, 122.25, shall we say, 122.00. Good support level down there. If we collapse, then we've got further targets down here around 121.00, and then we've got this lower trend line, but we're way off that, so I'm jumping the gun a bit there. But again, mostly a sideways pattern, looking at triangles to trade, possibly a downward sloping channel. Euro dollar's been driving me nuts for a long time. You know why. Up day, down day, 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 down day, up day. So how the hell you're supposed to trade this on a week-to-week basis, I really don't know. Absolutely impossible to hold a position for more than 24 hours. But at least we did expect that sideways trend a week and a half ago, and we certainly got it. I'm not quite sure how I realised that was going to trade sideways, but anyway. We've now formed, thanks to last week's price action, we've now formed a triangle that we can at least trade. So at least we've got some perimeters here again. Another triangle, 117.00 up to 18.00. So that's quite easy numbers to remember. Obviously the triangle will narrow day by day, so that the ranges will get potentially smaller. And then, of course, we wait for the breakout. No prizes for guessing that the dollar versus the Canadian also appears to be forming a triangle pattern. So again, a lot of resistance up here with moving averages, trend line, and even the fibs thrown in. So really that whole sort of 133.60, 133.90 area will be a big resistance level, or it certainly should be, was last time, although we kind of overran with these little long upper wicks on the candles. That was confusing. If you remember, we were short here, and in the end I just gave up, unfortunately, before we sold off. Right, and then on the downside, we've got a less important trend line down here around 131.10. So we might as well trade that triangle as well and wait for the breakout, and then hopefully go with the breakout. The longer term chart doesn't show anything, so I'll just ignore that. Gold has been an absolute bugger to trade as well, all because of this developing sideways trend. I kind of knew it was going to be a sideways trend, but as I said earlier, it doesn't make it any easier to trade until you get some sort of parameters. Again, lots of up day, down day, action. Really, Friday before last, massive update. Really looked like we were doing well. Close at the high of the week, beating the previous high at 1920, and then all that happens is on Monday and Tuesday we absolutely collapse and wipe out those gains, and then Wednesday, Thursday, Friday we just trade sideways. What are you supposed to do with that? Very, very difficult indeed. Range is getting narrower. Anyway, we do have a triangle to trade, so we're looking at resistance at around call it 19, 20, 22, I suppose. Break above 28 would be probably a buy signal. Downside, we've got 1890, which of course held the downside. That was my support level, which I hoped would break actually on Wednesday, and it didn't. Again, this big red candle, I thought, well, we should get some follow through on that, but we didn't. So tricky. I hope you managed to cover your short somewhere around 1890. I must admit, I ended up getting stopped out on this move back up, so I had a small profit, but nothing as much as I would have had if I'd bought down at 1890. Now, below there we've got the 100-day moving average at 1871. That was a good support level down here on the low of September. We bounced just above it in the first week of October, so we'll see what happens there. Break below 1870 should be a decent sell signal. We should retest this low down here around 1850, 1845. You might want to watch this video a couple of times. Sorry, I do talk quite quickly when I go through these things, but you can watch it again and slow it down. Right, this is the oil chart, and again, guess what? Triangle pattern, or certainly a sideways pattern forming. Lots of moving averages up here. We keep bouncing to them and then holding and coming down. So we'll see where we open on Sunday night. If we open much above 4100, you could probably take that as a bullish breakout, certainly above this candle high at 4130. What's this candle high? 4147. So, well, I think we'd have to at least get up through 4130 for this to be a buy signal. Failing to get up through 4100, well, you can see what's going to happen. Back down towards the 23.6% fib at 39.50, 39.40. We've been down as low as 39.22, 39.04 last week, so a break below there. Doesn't seem like there's an awful lot to stop us coming down as far as 36, the mid 36 area, and retesting that trend line in the two lows so far in September and October. But again, not, yet another sideways pattern to trade. Again, kind of saw it coming, but didn't make it any easier. The only good thing is I think I did save us from a lot of pain and frustration from running positions, getting into things that we couldn't get out of. The strategy of just scalping over the last week and a half has certainly saved us money, even if it hasn't made us an awful lot. British pound, again, quite certainly last week, up one day, down the next, big moves, but each day recovering and then wiping out gains. So again, tricky. Triangle for sure. This is the lower trend line around 128.80, 128.70, upper trend line around 130.10, 130.20. So we'll watch for a breakout of those parameters. But really on the downside, we'd have to get through the 100-day moving average, which is around 128.40, 128.35. If we do that, we might get a tiny swing trade to take advantage of on a move down to 127.45, 127.15. That looks like a very good support level down there as well. So I'm going to start, I've been asked to cover the pound a few times, so I'm going to start throwing that into the chat room as well. Okay, that's it. I'm going to do a video on the stock markets now. Just going to end, I'll release this a couple of days after I've released it for my subscribers. So if you're watching this maybe on Tuesday, I just want to show you the chat room that we have. This has been going for a month. It's been pretty successful. Not only do I post live trades, but I also post my charts and all the reasons why I'm entering positions and exiting positions. I do that live. I give trade ideas, full technical analysis with forecasts for the day, everything you need to be hopefully a successful trader, copying what I do. And if you would like to see my website, please go to daytradeideas.co.uk. Everything we do is here, including we have an online course which is excellent, and it actually has a huge discount at the moment, 50% off if you want to learn all the techniques that I use every day and have used for 15 years to do technical analysis, and also all the trading strategies that I've learned from 33 years of being a trader since I started in 1987. All the products that we have are here, the main one being this premium membership. It's the most popular subscription. It gives you absolutely everything. It's a real learn while you earn kind of setup. You get to copy all my trades in the live chat room. You get written reports every morning delivered by email. It's the whole thing. So I really do highly recommend that. It's very, very popular.